and you see, tons of commercials of banks saying, or other companies saying, hey, sign up with us and we'll boost your score, 30, 40, 50 points for free. And to get it straight from the source here with Eddie Gomez, since mortgage broker, so he does a lot of applications. So I just kind of want to ask you, when you see all those commercials, obviously it sounds great of, hey, we want to help you get a good credit score. But I guess coming from you, do those actually help? And if yes or no, why?
Yeah, so it all depends on the individual because everybody has such a nuanced and personalized credit profile that it could help some people and for others it could absolutely hurt. So if you're somebody that doesn't have a credit score to begin with, best thing you can do is become an authorized user on somebody's account who does have a really good credit score. Get yourself a secured credit card, make small purchases on it, pay them off almost all the way, make sure to maintain about a 10% balance so that they don't close those accounts. And then over just a couple of months, you could end up with a very, very high credit score really quickly with a minimal amount of work. Now, if you're somewhere else on the spectrum of, you're with your credit profile and your score, say that you're in the maybe low 600s, maybe lower 600s, and you want to boost your score, maybe it can be something like adding self-reported utilities, and paying those consistently that can help you out. Those are the type of things, obviously paying your bills on time, maintaining long-term lines of credit. So you don't want to close anything that could be helping you right now, any credit lines. You can also keep your balances low, try and keep them, I'm not sure what the latest is, but I try and keep my balances below 10% of the limit. So those are some of the smart things you can do.
Gotcha.
Some of the not so smart things that you can do are apply for department store credit cards. People come to me quite a bit and they say, well, I don't want to do a hard pull on my credit card or my credit score because I don't want to have a hard credit hit and it take points off of my credit score. Well, eventually we do look at their credit report, and because you have to buy a house, and we see 7 different types of department store credit cards. Those are the ones that are going to hurt your credit more than anything else. 1 or 2 is fine. Over time you collect more and you get different lines of credit because it's natural, but repeatedly going to a department store and accepting their offer for 10% off of your purchase if you sign up for a credit card is a way to really knock down your score pretty quickly, a few points at a time.
Okay, so I know department stores. So you're talking like the Target red card where they say 5%, get a credit card with us. You're saying some people load up on those and it just absolutely wrecks their credit score.
You've got your classic ones that everybody has, right? Victoria's Secret, Home Depot. There's an Amazon. There's the ones that everybody's going to have. But then you start getting into Hot Topic. You start getting into just nuanced little department stores.
That's true. Because every store, I think, seems to if they don't have an app, they have a credit card or some kind of store rewards card.
Yeah, exactly.
Where you have to actually, and it's not like one of those I know some gas stations, but they don't tie your bank stuff to it. They're just, but ones that actually tie your information up.
Yeah. I mean, they're reported, to the major 3 credit bureaus, and they show up on your FICO score. The next thing I see is, people that have good intentions, but they're misguided. So I'll talk to people and they say, yeah, I really want to apply for a home loan. I want to buy a house. I just need to pay everything off and get my credit right first. Okay, well, it could cost you about $10,000, depending on what you have going on, to pay off all of your credit cards, pay off all your debts, all your liabilities, all your collections. Well, really, you might have been able to get your score boosted by 80 or 100 points by only spending $2,000 or $3,000 instead of the 10. Those really require a little bit of analysis by, your loan officer or a credit repair specialist. But sometimes it's only a couple of moves. So you want to talk to somebody before you make those moves to see if they're really going to be a benefit to your credit score, your credit profile.
Gotcha. So, no, I mean, that does make sense, especially because if you're kind of, basically kind of in the dark and you're trying to figure out what works and what doesn't, you could end up you get on the right path, but you made a few mistakes before you did.
Sure.
And you kind of made it almost much harder on yourself than you needed to.
Yeah, I mean, in a perfect world, you want to pay off all of your debts, you want to pay off all of your collections, you want to pay everything off. But it depends on whether you want, what's more important to you. You want to pay off all of these collections and liabilities even the ones that you don't have to, or do you want that money to buy a house?
Right.
And that decision's up to the
Right.
up to the individual.
I mean, I know especially being in Texas, you got the Dave Ramsey followers of the world. So hearing the holding on to debt, I think probably put some of them in a cardiac arrest. But I mean,
we'll check with somebody first,
of course,
but that's the main idea.
I mean, we even had a guy that we helped that he literally had to put like his he had to fill up his car with gas on a credit card because he was very responsible, paid off everything, but he had no credit score, and so we had to figure out how to.
Yeah, we've had several people like that who are very responsible with all the best intentions, where they got a car, they paid it off right away, they got whatever they purchased, they paid off right away. So really, I mean, they have a great financial history, but that, for reasons beyond you or I have control of, isn't what's packaged into your credit score. So they had to go back, open up lines of credit, and sort of develop that score again. Right. The good news was we were able to get them in a position where they had a really high credit score. Yes.
As soon as his credit score kicked in, it jumped above mine. I've been working on it for like a decade. Yeah. And in like a month, he like leapfrogged me.
Yeah. So one of those things you got to be careful with, because it takes very little to take it down, and it takes a lot of hard work to get it back up.
Well, then I guess the last thing I want to ask is I know you see those companies where they're like, hey, whether it's a credit card company or like they do loans, or it's a bank or whatever it may be, and they say if you sign up with us, it will immediately boost your score like 40 points. I have heard that there's like different algorithms essentially that like mortgage loan people like yourself look at versus car loans versus. So when I hear that and they advertise it of, hey, that 40 points can help you get a great loan, that sounds too good to be true. So like, is there something that they're just not telling you when you see those guarantees?
Yeah, so I wasn't sure what it was for a long time, because you do get like Experian, who's one of the major credit bureaus, or
I think SoFi talks about it on and on.
Yeah, there's several. And then a lot of times people will be tracking their credit score on an app, right, after they sign up. I don't know if they truly help that much. It sounds too good to be true, in my opinion. When it sounds like that, it usually is. Well, there's also two different types of scoring models, right? So there's your FICO, and then there is your Vantage score. So a Vantage score is what you use for like a car lease, auto loan, and I'm sure a wide variety of other things. The FICO score is what's taken into account when you're getting a home loan. A lot of times I'll have people come to me and they'll say, yeah, I paid for this service, I followed it on an app, my credit score is now at 760. We pull their credit and it's at a 720. Still a fine score, but obviously a disappointment if this is what you've been tracking. And this is pretty much the case with every single file I've ever had where somebody came to me with the expectation because they were subscribed to a service.
Yeah, I mean, I'm a little guilty on that myself, but I use it more now as it gives me at least a decent idea of like, okay, I'm doing okay.
Yeah, great to see like, where you stand.
Yeah, am I trending positively?
Exactly, and it does serve that purpose. It does tell you if you're trending positively, but it's just a different model that's used for sudden purchases, and then one that we use for home loans.
Yeah, and that's why I want to bring that up, because like I said, I hear that and I was like, if it was that simple to get credit in a favorable spot, well then there wouldn't be near as many people that have to like go through the process they have to go through to get it to repair with whatever they may have done, which obviously could just be, sometimes life just happens, and
yeah, absolutely,
and you just end up with a ton of bills and it hurts your credit score. Like, not trying to joke, I don't know, you don't know what someone's story is of how they got there.
You're right. Yeah.
But to your point, I saw that, I was like, that's too good to be true. There's no way. So I think it goes back to what we talked about before of talk to your loan officer. Just double check, because I think the other thing from what you're describing, that at least what I'm hearing is people who spend the time and the money and all, and just to find out, well, if you had just done this instead, and nobody wants to hear that.
Yeah.
I could have been doing this the whole time, but instead, so.
Yeah, the moral of that story is to start sooner rather than later.
Yeah.
Because even if you're not approved for a house, you are approved for a house. Doesn't mean you have to buy one, but at least you get this information along the way.
Yeah. That's why I say if you haven't like just looked at an application, at least get pre-qualified, definitely look into that, because if nothing else, it'll show you what to work on. So you see like what the red flags are, what the potential issues may be. Just so that way you don't end up flailing around and getting involved in a bunch of programs that, like I said, might have good intentions, but doesn't actually assist you the way you actually need it to. So I hope this has helped, because credit scores are not going away, regardless of what your opinions on them may be. So if these are the rules, you got to play by the rules of the game. So I just want to help out so that way you can succeed and get into a home. So thank y'all so much, and I'll see y'all in the next one.